It's Monday, February 3rd, 2026. And ladies and gentlemen, the American guy here, silver just bounced 523 in a single session. That's a 6.61% move from a low of 79.17 to a high of 85.78. Right now bid is at 84.35, ask at 84.60. And every trader watching this is asking the exact same question. Is the bottom in, or are we about to get absolutely demolished again? Because here's what you need to understand. Just 48 hours ago, silver crashed from over $121 to $70.33. That's a drop of over 30% from the lifetime high. Over 30%. And now we're bouncing 6.61% in one day, and everyone's celebrating like the bull market is back. But I've seen this movie before. I know how it ends. And if you don't understand the difference between a dead cat bounce and a genuine reversal, you're about to learn a very expensive lesson. So shut up, pay attention. Let me show you exactly what's happening in the precious metals market right now, why this bounce is happening, and what you absolutely need to know before you make your next move. Let me give you the raw data, because numbers don't lie. Markets lie. Analysts lie. But the price on your screen right now, that's reality. Silver as of right now, bid 84.35. Ask 84.60. Today's gain 523, up 6.61%. Today's range, 79.17 to 85.78 per ounce. Per gram, 271 per kilo, $2,711.96. So silver bounced from 79.17 to 85.78. That's a 661 intraday swing. For traders who bought at the bottom and sold at the top today, that's nearly an 8% gain in hours. But let's zoom out for a second. Where were we just weeks ago? The lifetime high was 121.66. Right now we're at 84.35. That means even after this massive 6.61% bounce, we're still down over 30% from the peak. Let me say that again. Silver is down over 30% from the lifetime high, and we just bounced 6.61%. That's not a recovery, that's a reflex. That's a gasp for air before potentially drowning. Now look at the broader precious metals market, because silver isn't bouncing alone. Gold, $4,183.80, up $125.10, up 2.69%. Platinum, $2,162, up $43, up 2.03%. Palladium, $1,722, up 17, up 1.0%. Everything's green. The entire precious metals complex is bouncing. Gold up 2.69%, platinum up 2%. Even palladium, which nobody cares about, is up 1%. This is what's called a coordinated bounce. This is bargain hunting. This is short covering. This is traders who got absolutely obliterated on Friday looking at the charts and thinking maybe the worst is over. But is it? FX's Street is reporting that silver is gauging temporary support above $70. Temporary support, not strong support, not a reversal. Temporary. They're pointing to the 50-day exponential moving average at $79.50 as a key level. Right now, silver is trading at $84.35, which means we're above that 50-day EMA. That's technically bullish. That's a sign that maybe, just maybe, we found some footing. But here's the problem. On Friday, we hit a fresh 4-week low of $70.33. That means just 48 hours ago, we were trading below $75, and now we're at 84. That's a 14% bounce from the low in 2 days. When you see moves like that, violent down, violent up, what you're witnessing is not healthy price discovery. What you're witnessing is chaos. What you're witnessing is a market that has no idea where it wants to be. Technical traders call this volatility. I call it a warning sign. Because when a market moves 30% down in weeks, then bounces 6% in a day, then bounces another 8% from the intraday low, you're not in a trending market anymore. You're in a whipsaw. You're in a meat grinder that's destroying both bulls and bears. And the people making money? The algorithms, the high-frequency traders, the institutions who can trade size in milliseconds. Not you. Not the retail investor watching this video trying to figure out if they should buy the dip. So what changed between Friday and today? Why did silver go from $73.33 to $84.35 in 48 hours? Two things: bargain hunting and easing risk aversion. Bargain hunting means traders looked at silver at $73 and said, that's too cheap. The fundamentals haven't changed. Industrial demand is still real. China's export controls are still in place. The 678 million ounce deficit is still real. At $73, I'm a buyer. And they're not wrong. Silver at $73, if the fundamentals hold, is probably undervalued. The question is, will the market give you time to be right? Or will the volatility shake you out before the thesis plays out? Easing risk aversion means the panic that drove Friday's sell-off has subsided. The margin calls have been met. The forced liquidations have cleared. The weak hands have been shaken out. And now, the survivors are looking around and realizing that maybe the world isn't ending. Maybe the Trump-Warsh Fed nomination isn't as hawkish as everyone feared. Maybe interest rates aren't going to spike. Maybe the dollar isn't going to strengthen to the point where it crushes commodities. So risk appetite is coming back. Not aggressively, not confidently, but it's coming back. And when risk appetite returns, money flows back into assets that got oversold, like silver. But here's what the smart money knows. Here's what the institutions understand that retail doesn't. A bounce off a low doesn't mean the bottom is in. A 6% rally after a 30% crash doesn't mean the bull market is back. It means you got a relief rally. It means you got a short squeeze. It means you got a technical bounce off oversold conditions. But it doesn't tell you anything about the next week, the next month, or the next quarter. So is 73.33 the bottom? Is this the moment where silver reverses and starts the next leg higher back to $100, $120, $150? I don't know. Nobody knows. Anyone who tells you they know is lying or selling you something. But here's what I can tell you. Here's what the data shows. Silver found support above $70. FX Street is specifically calling out that $70 level as a key support zone. We tested 73.33, didn't break below $70 and bounced. That's a good sign. That's a sign that buyers are willing to step in at those levels. That's a sign that there's demand, real demand, physical demand, not just paper speculation. The 50-day EMA at $79.50 is also holding. Right now we're at 84.35, which means we're above that moving average. Technically, that's bullish. That's a sign that short-term momentum is shifting positive. But, and this is a big but, we're still down over 30% from the lifetime high of 121.66. We're still in the aftermath of a historic crash. We're still in a market that's defined by volatility, not stability. So if you're asking me, should I buy silver right now at $84? My answer is, it depends. It depends on your time horizon. If you're buying physical silver to hold for 5 years because you believe the fundamentals are intact, then $84 is probably fine, maybe even good. Because in 5 years, if silver's at $200, it doesn't matter if you bought at $80 or $70. But if you're a trader, if you're trying to catch the bottom and ride the bounce, you need to understand that this could easily be a dead cat bounce. We could rally to $90, maybe $95, and then roll over and crash back to $70 or lower. Here's what I think is happening behind the scenes. Here's what the institutions are doing that retail doesn't see. The smart money sold at $120. They saw the parabolic rally. They saw the leverage building up, and they took profits. They exited. They waited. Then the crash happened. Silver went from $120 to $73 in weeks. The leverage traders got wiped out. The margin calls came. The forced liquidations cleared the market of weak hands. And now the institutions are buying. Not all at once, not aggressively, but methodically, patiently. They're accumulating at $75 at $80, at $85. They're building positions slowly because they know the volatility isn't over. They know there's probably another leg down. They know we could retest $70 or break below it. But they also know that at some point in the next 6 to 12 months, silver is going higher because the fundamentals are real. The deficit is real. The industrial demand is real. So they're buying, but they're not chasing. They're not FOMOing. They're being patient. And you should be too. What you need to do right now. So here's your action plan. Here's what you do based on where you are right now. If you're holding physical silver, you do nothing. You hold. This volatility is painful, but it's also normal in a bull market. The fundamentals haven't changed. The 678 million ounce deficit is still real. Industrial demand is still growing. China's export controls are still active. You bought physical for the long term, so hold for the long term. If you sold during the crash, don't chase this bounce. Don't FOMO back in at $84 because you're scared of missing the reversal. Wait, be patient. If this is a real bottom, there will be plenty of time to get back in. If it's a dead cat bounce, you'll get another chance to buy lower. If you're thinking about buying for the first time, dollar cost average, don't try to time the bottom. Buy a little at $84. If it drops to $75, buy a little more. If it drops to $70, buy even more. Spread your buys over time so you're not fully exposed to one price point. If you're a trader, use stops. Manage your risk. Don't over-leverage. This market will kill you if you're not disciplined. The volatility is extreme. The moves are violent, and the whipsaw will destroy your account if you're reckless. Let me leave you with this. Silver bounced 523 today, and that's 6.61%. Gold bounced 125, that's 2.69%. The precious metals complex is green, and everyone's breathing a sigh of relief thinking the worst is over. But the bounce doesn't erase the crash. We're still down over 30% from the lifetime high. We still experienced a historic sell-off that wiped out thousands of traders. The leverage is still unwinding. The volatility is still extreme. This could be the bottom. It could be the start of the next leg higher, but it could also be a dead cat bounce before the next leg down. The only way to know is to wait, to watch, to see if this support holds, to see if buyers continue to step in, to see if the fundamentals reassert themselves over the paper market chaos. Until then, manage your risk. Don't overleverage, don't FOMO, and don't assume the worst is over just because we had one green day. Because in markets like this, hope is not a strategy. Discipline is. This is the American guy. It's Monday, February 3rd, 2026. Silver bounced 5.93, up 6.61%, now trading at $84.35. Gold bounced $125, up 2.69%. Is this the bottom? Is this the reversal? Or is this just a relief rally before the next leg down? Nobody knows. But the smart money is accumulating slowly, patiently, while retail tries to time the perfect entry. If you're holding physical, hold. If you're trading, use stops. If you're buying, dollar cost average. And if you're waiting on the sidelines, wait for confirmation. The fundamentals are still real. The deficit is still real. The industrial demand is still real. But the volatility is also real, and it's going to take time for this market to find its footing. Stay disciplined, stay patient, and remember, they can't print silver, but they can shake you out of it if you're not careful. This is the American guy. Hold the line.